So before we get started, check out the following links in the description box below as highlighted in the image shown. So you'll be able to get our past papers, our link to our official website, link to accreditations, our link to donation page, and contact details in the description. So once you'll be watching a certain video of any lesson or of any past paper, you'll be able to get all these links, and you can be able to get to download past papers, to reach to our official website. You'll be able to see links to our accreditations so that you can see which authorities have accredited us. You'll be able to reach to our donation page as well as our contact details.
Okay, welcome class again. Welcome. Now we'll be starting from this question, almost our question number 10. We'll go up to question from 10 up to 19. 10 up to 20, yeah, 10 up to 20. So use the following information to answer question 10 to 17. That is a sole proprietor. You can see the information, additional information. Then we have the questions that are coming after that, all the way up to question 17. Now the best advice for this question is, before you start tackling them, just do this. Prepare the statements. And we are talking about the statement, the financial statement, and then the statement of financial position. Prepare those two statements. Once you prepare them, it will be very easy for you. So that's where we're going to start from. Just prepare them, then you'll answer all the questions. They will be very easy to be answered. So let's go. Statement of financial position. I hope this space will be enough for me. Just prepare it here. So statement of financial position. This will be Bernard Kioko. So Bernard Kioko. Then you say financial statements. Financial statement for the period. Ended. For the period ended. This is that first deck, 2023. Just like that. And then of course we have the three columns to help you. We start the book. We always start with sales. So just go to the sales. I hope it does. We don't have a lot of additional information. The additional information, you need to check the additional information just to be sure to avoid confusions. So this is 218,000 is owing for motor vehicle expenses. Yeah, take note of that. So take note of that. Then 6.8 has been prepared for rent. Take note of that. Depreciation is to be provided for the year as follows: motor vehicle 20% on cost, fixtures 10% on reducing balance, inventory at 99.26. That is the only additional information. So take note of that. We have this accrual, we have prepayment, and we have the depreciation and the closing stock. Once you are you've taken cognizance of those additional information, you can proceed with the work as normal. So capital as at January 1st, 2023, that one goes to the balance sheet. Receivables, balance sheet or financial position. Cash in hand, balance sheet. Payables, balance sheet. Fixtures and fittings at cost, balance sheet. Discount allowed and discount received. This will come in the financial statement, but not now. Inventory, opening inventory, yeah, it will feature there in the trading account. Sales, it has already featured. And sales, we have the figure 491,620. Sales is always a credit account, so don't confuse. 491,620. So we already have that one there. And then we less cost of sales. Under cost of sales, we have the opening stock. Which we've already been given here. The opening stock is this inventory 18,460. Preferably, let's have it there. Then we can have purchases. Do we have any workings on purchases? Carriage inwards will be the working on purchases, so purchase returns, but we don't have any here. So since we don't have any here, we'll just maintain our middle column. So purchases is here, 387,936. So 387,936. Then after purchases, we go now to the closing stock. We are trying to find the cost of goods sold. So the closing stock was here in the additional information. Inventory at the close of business was valued at 19,926. So we just pick that. Please remember these zeros, they have been restricted here. They have been restricted, so you need to remove them. We need to remove them. So we'll just talk of 19,926 as being our closing stock, and closing stock will less. So closing stock, this is what has remained at the end of the year, so it doesn't form stock, part of the stock of this particular year. So it's 19,926 if I'm not wrong, and we are going to deduct that. Sorry for that. Where are we? There we go. So 19,926. We need to less this to get the cost of goods sold, or cost of sales, in this case cost of sales. So this will be, just get the total. So that will be 18,460 plus 387, 936 plus minus 19,926. That gives us 386,470. 386,470. So less that, 386,470 minus 491,620. This gives us 105,150. 105,150. So normally after this we add any gains or other incomes, and it's at this point that we're going to add the discount received, because discount received is a gain. Discount received is a gain. So we add 1175 here, and what we get, so 1175, that gives us 106,325. So we are ready to less the expenses. So we start listing the expenses. The first one you have is discount allowed. Discount allowed is an expense. How much? 1304. So let's put it in the inner column. 1304. The next we have lighting and heating. Lighting and heating, it's an expense. Do we have any additional information on lighting and heating? No, we don't. So we put it in the inner column. Lighting and heating, how much is it? The amount. It's always good to draw the lines so that you pick the right figure. 6184. And then if you must, by the way, draw using a pencil so that you can delete at the end. Remember, one of the instructions was you should not write in this paper. But or if you have a ruler, just place the ruler against so that you get the figures right. Otherwise, it's very easy to get a wrong figure. So motor vehicle expenses. Motor vehicle expenses, that's an expense. So we are going to capture it. Motor vehicle expenses, it's an expense. So how much is motor vehicle expenses? 2862. But there's something about motor vehicle expenses. It had some additional information. So if it had additional information, put it in the innermost column, like I've done. 2862. Then we are told that 218,000 is owing for motor vehicle expenses. It's owing, so it has not been included. So what we simply do is we add accrued motor vehicle expense. How much? 618. So if you add the two, it will be 2862 plus 618, which gives us 3480. So it's 3480 that comes here as the total cost of motor vehicles. Then rent. Rent, we also have additional information on rent. So we'll also have it here, 8841. Then we check the additional information. 680 has been prepaid for rent. Has been prepaid. So it means 680 is for next year. So if it's for next year, we are paid for next year. So it means you are going to deduct what you have paid minus 680 to get the amount that is actually that actually refers to this year. So let's get going. So what are we going to do here? We say prepaid rent. This has been paid. It's for next year, not this year. So we reduce it. Any prepayments, less. Any accruals, add. That is the simple rule. So we less this. 8841 minus 680, we have 8161. So those are the expenses, we are capturing them, right? General expenses, yes, the figure is 7413 and we don't have any working on it, so we capture it as it is. Then provision for depreciation, here there is depreciations are normally expenses or losses, put them there. So for us to start with furniture and fittings. Let's go to the question. Depreciation is to be provided for the as follows: motor vehicle 20% on cost, fixtures and fittings 10% on reducing balance method. Reducing balance method, it means we take the cost less the accrued depreciation, and the answer that we get 20% of 10% of it. That will be the depreciation for this particular year. That's how we go about it. So what is the cost of fixtures and fittings? 42,200. This one here, 42,200. Then depreciation, accumulated depreciation is this one. Provision for depreciation, this one, 2,200. Then what we get? 40,000. 40,000. Then 40,000. So then we are talking about fixtures and fittings 10% on reducing balance method. So the cost, the remaining balance of furniture and fittings is simply 40,000. So 10% of 40,000 is 4,000. So this 4,000 becomes our depreciation for this particular year. So furniture and fittings 4,000 depreciation. Then motor vehicle. Motor vehicle is motor vehicle 20% on cost. So this one is not on reducing balance method, it's on cost. So simply take 20% of the cost of motor vehicle. So we go to the cost of motor vehicle, should be somewhere here. Motor vehicle at cost 45,730. So simply get 20% of 45,730. 20% times 45,730. What do we get? 9146. So 9146. The total depreciation is 13,146, like that. We are done with the depreciation. Just like that. It's not easy. It's not also hard. It's just to understand the concept. Okay. So reducing balance, take the cost less the accumulated depreciation. Whatever remains, get the percentage on it. If it's on cost, just go straight to the cost of the item, get the percentage. It's called straight line method when you talk about the cost, depreciation on cost. Now, having said that, is there anything that we are remaining with that we have not tackled possibly? I doubt. So, I then think that we are good to go. General expense we've captured, rent we've captured, motor vehicle we've captured, lighting and heating we've captured, we've captured, motor vehicle we've captured, rent we've captured, general expenses we've captured, provision for depreciation we've captured. So I think we are good to go. So let's add all these expenses. We're going to add 1304 plus 6184 plus 3480 plus 8161 plus 7413 plus 13146. That gives us 39688. 39688. So this 39688, 688, we put it here. Then we less from that, minus 106, 325. This gives us 66, 637. 66, 637. Perfect. 66, 637. So that is what we have. Oh, 6325 minus, I'm getting a different answer from what I had worked. 106,325 minus 39,688. This gives me 66,637. Getting a slightly different answer from my first working. So this is 6184. We've gotten it right. 2862. We've gotten it right. $88.41 minus 680. 7413 plus 218, that is also right. 9146, 4000. So let me repeat this computation very fast to see if we are on the same track. 6184 plus 2862 plus 8841 minus 680 plus 7413 plus 218 plus 9146 plus 4000. That's 7984. Discount allowed plus 1304. 9288. Getting a slightly different answer. Let me see where let me just get these figures right. Discount allowed 1304. That's correct. Motor vehicle lighting and heating 6184. That's correct. Motor vehicle expenses 2862. Sorry, I've seen where the mistake is. Sorry. Here, instead of capturing this as 218, I captured this it as 618. So please note that mistake, and it's a very dangerous mistake. 218, and it happens. So please, let's learn from our mistakes. You make a mistake, it can mess you big time. So that's where the mistake was. So let's repeat again the computation. 1304 plus 6184 plus 3080 plus 8161 plus 7413 plus 146. That gives us 39288. 39288. So minus 106,325. That gives us 67,037. Okay, this one is not, doesn't want to. Okay, 67,037. This is our net profit. 67,037. Perfect. So let's move to the next part. We are preparing now let's prepare the, sorry for that. Yeah, let's just prepare it from here. Sorry for that. Let's prepare it from here. So we are preparing the statement of financial position. How are we going to prepare it? We say Bernard Kioko, statement of financial position. So Bernard Kioko, statement of financial position, as at that first deck 2023. That's how we prepare. Then you start with the non-current assets, and in our case we have furniture and fittings and motor vehicles. So pick the cost of each. So for furniture and fittings, the cost is fixed standard fittings 42,200. So you write here 42,200, that is the cost, 42,200. Then motor vehicle cost is 45,730. So you come here 45,730, 45,730, 45,730. Pick the figures correctly. Then you come here, we talk of depreciation, and depreciation will now be the total that has accumulated plus the for this particular time. So you can see fixtures and fittings, what had accumulated is 2,200, and then the depreciation for this current year is 4,000. So 4,000 plus 2,200, that is 6,200. So that's what we'll have here, 6,200. And then for the motor vehicle, the accumulated was accumulated motor vehicle was this provision, this on 15,292. So 15,292 plus the current depreciation for motor vehicle, we got it as 9146. So plus 9146, that gives you 24,438. So you simply come here and say 24,438. That is the depreciation, 24,438. That is the depreciation for motor vehicle. Then you have the net book values. So the net book value is 42,200 minus 6,200. That gives you 36,000 for furniture. Then for motor vehicle will be 45,730 minus 244,38. This gives you 21,292. 21,292. So get the total. Don't worry, these things are easy. 57,292. That is the total for non-current assets. Then let's go to current assets. Identify the current assets. And the current assets now we have, of course, receivables. Receivables is a current asset. So receivables. How much is receivable? Receivable is 42,737. 42,737. Then we add what? We add cash in hand 1411. Cash in hand 1411. Cash in hand 1411. Then write well, not like me. Sometimes my poor handwriting costs me a lot, like what you just seen before up there. So 1411. Then I'm trying to pick any current asset. Do you have any other current asset? No, we don't have any other current asset. Inventory and prepayment. So prepaid rent is an asset. So prepaid rent 680, inventory 19,926. So prepaid rent is an asset, is a current asset 680. Then closing stock, closing inventory 19,926. I think that was the figure. So get the total, 42,737 plus 1411 plus 680 plus 19,926. This gives you 64,754. 64,754. Then current liabilities, we have saw something on current liabilities. Again, go back the start. You have payables at 35,404. Payables 35,404. Payables 35,404. Then Bank overdraft 19861. Bank overdraft 19861. Bank overdraft 19861. Then we also have accruals at 218. Accruals at 218. Remember the motor vehicle expenses, this one? Motor vehicle expenses that are accruing, this one. So motor vehicle expenses 218. Accrual 218. So we add this. I don't think if we have any other one. So add those. So it will be 35404 plus 19861 plus 218. That gives us 55483. Ideally, what we needed to have done is we needed to have pushed this in this column in the innermost, so that this one can come here, and then now get the total. But anyway, can just work the the net capital employed. Net capital employed will be non-current asset plus current asset minus current liabilities. So this one we can put it in a paragraph to show that we are deducting. So can you get it? 57,292 plus 64,754 minus 55,483. This gives us 66,563 as our net capital employed. Then we say financed by. Of course, we have capital. Capital. What is the capital? Go back to the question. Capital is 26,094. 26,094. So 26,094. Then you add net profit, of course, from the financial statement. So net profit is 67,037. 67,037. Then we list drawings. I've seen drawings in the question. So let's go back, pick the drawings. There was a drawing somewhere. Drawings here. 26,568. 26,568. I've told you be very keen on picking these figures. 26,568. If you pick it wrongly, it can mess you big time. So let's add that. 26,094 plus 67037 minus 265,68. This gives us 66,563. And this is our net capital employed. So you can see net capital employed is equals to net capital employed. This one and these are balanced. So we are done. That we have already prepared the financial statement and the statement of financial position. So that's how it goes. Now, let's come back to the question. To the question. At least this one, it has been lengthy, but it will help us answer. So that's how we go about this question. Please, it's not about guessing, and you cannot get it right when you keep on working an item. But I'll just work the whole of it, and then you will see. We will spend very little time now answering this question. Now, question 10. What is the total value of Bernard Kyoko's inventory at the end of the year? Total value of Bernard Kyoko's inventory at the end of the year. What is the total value of Bernard Kyoko's inventory at the end of the year? Wow, this is a good one. So let's see where they have gotten these figures from. 18,460. 18,460. This is inventory. Of course, this is opening inventory. So it cannot be closing inventory. It cannot be at the end of the year. This is inventory at 1st January 2023, 18,460. So that one is definitely wrong. Total value of Bernard Kyoko at the end of the year. What 18,460 is at the beginning of the year. 1466, where have they gotten that figure now, for God's sake? 1466. I don't know where they've gotten it. Let's just forget about it. 19,926. Makes a lot of sense. Inventory at the close of business was valued at 19,926. Then 38, 386, they have simply added this 19 plus this. It cannot be. It cannot be. 19 plus 18, you get 30, yeah, that's 7, 3, yeah. So they've simply added, that one cannot be. So this one is definitely wrong. I don't know where they've gotten this 1466 from. 1466. I don't know where they have gotten it from, but let's just ignore it. The correct answer is C, 19,926, and this one is even given to us by the question itself, because the question itself tells us that inventory at the close of business was valued at 19,926, and that's what the question is asking. Total value of Bernard's Kioko's inventory at the end of the year, 19,926. So the correct answer is C. Okay. What is the total amount of depreciation expense for the year? Total amount of depreciation expense at the end of the year. We have already calculated this, and the total amount is, in fact, it's just here. I will not go into a lot, let's save time. 13,146. That is 4,000 plus 9146, you get 13,146. So simply come here and look for this. This is the correct answer. What is the net profit for the year? We have it here, 67,037. So come here, 67,037, you have it here. Correct answer. What is the total value of current assets on the statement of financial position? Current assets, the figure is here, 64,754. So just come here, look for 64,754, we have it there. So tick, that one is correct. What is the total net book value of fixed assets on the statement of financial statement as at 31st December 2020? Total net book value, we have here net book value, 57,292. So simply come here, look for 57,292, we have it there. That is the correct answer. What is the total value of current liabilities on the statement of financial position? So we come to current liabilities, it's here. The total value you can see 55,483. So just look for 55,483, we have it here, B. That is the correct answer. Question 16, what is the total value of owner's equity on the statement of financial position? Owner's equity, this is the correct value. We have it here, owner's equity. We have it here. That will be 66,563. This is the correct answer. Determine the depreciation for the year on fixtures and fittings using the straight line method at the rate of 10%. We had already gotten it. The depreciation for the year on fixtures and fittings using the straight line method. Oh, this one we had not gotten it. We had not gotten it. We need to get it. What we had gotten was straight line method. Straight line. Oh, no, sorry. Reducing balance. If we were to work with straight line method, we'll simply get 10% of the original figure, which was 42,000 and something, I think. The original figure, 42,200. 10% of 42,200. That's what will 42,200. This will give us 4,220. 4,220. So the correct answer is C. Straight line method, I told you, just get the percentage of the total of the cost of that item. So we are done. Now let's continue. Sanchez trial balance as at 31st December 2023 contains the following information. 15% bank loan, 400,000. Interest paid, 38,000. The interest that was debited to P&L account was Sanchez. Now these are different questions, not related to the first one. Sanchez trial balance as at 31st Dec 2023 contains the following information. 15% bank loan. 15% bank loan. 15% of 400,000. How much is that? 60,000. It's 60,000. So interest paid was 38,000. What was paid was 38,000. The interest that was debited to P&L account was, now they are asking us on one of the concepts. asking us on one of, do we record the entire interest of 60,000 or what we have paid? We record the entire interest of 60,000, not what was paid. Accrual concept. You record when it is incurred, not when it is paid. So the interest that was debited to P and L account was, the answer is A, 60,000. That should be the correct answer. Let me just check something here. So the correct answer is A, 60,000. But what has been paid is 38,000. What is outstanding is 22,000. So this will appear as an accrual, and this has been paid. But the entire cost, the entire expense for that year is 60,000. So what will be recorded will be 60,000. Thank you. Hope that is very clear. Now, okay, 60,000. So record the entire interest for that particular year. Number 19, an office furniture is purchased for 100,000. The residual value at the end of its expected life of 4 years is estimated at 40,000. It's estimated at 40,000. The amount of depreciation for the first year ending that 1st March, if this furniture was purchased on April 1st, 2023, is shillings. This one's so easy. So depreciation is equals to cost minus scrap value or residual value, scrap value, over the number of years in use, So in our case, it will be 100,000 minus 40,000, which is the scrap value, over 4 years. This is 60,000 over 4 years. So this gives you 15,000 every year depreciation. 15,000 every year depreciation. So let's ask ourselves the question again. An office furniture is purchased for 100,000. The residual value at the end of its expected useful life is 4 years, is estimated at 40,000. The amount of depreciation for the first year ending at 1st March 2024, if this furniture was purchased on 1st April 2023, is shillings 15,000. So this is the answer, 15,000 A. And that is the formula on how to go get that answer. The next question, question 20. Errors are corrected via the journal because, yes, it's true that errors are corrected using journal. Why? It saves the bookkeeper's time. It saves entering them in the ledger. It is much easier to do so. It provides a good record explain. The answer is definitely D. So D becomes our answer. It provides a good record explaining the double entry records. Journal entries, you will always debit and credit and give an explanation on why you are debiting and why you are crediting. So the correct answer is D. Not because it's easier to do so, no. Not because it saves time entering the ledger, no. Not because it saves the timekeepers, no. The answer is that that's how it's supposed to be corrected using the journal entries. And the journal entries will give a good record explaining the double entry records and why you are actually correcting the same. So thank you. That marks end of our part 2 of this paper. Let's meet in part 3. Thank you.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions. And also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.